Good morning. So it's Negrasam FX again. You remember the updates, the trade setup that I showed you on silver trade. I think that's the last video I posted on this my YouTube channel. So this is the updates on the trade. How I entered the trade and everything is on that video. This is the update on the trade. We have full TP hit. Okay, no, this one I entered this yesterday, not this one. It wasn't a silver trade, it was GBPJPY. GBPJPY. I think it was GBPJPY. Yes, yes, this is it. I see it now. I entered this trade on Thursday and I held it till Monday. So one thing with trading is that you have to be patient. If you understand market structure and liquidity, all you just need is patience. Just have to be patient to allow your edge to play out. Are you seeing it now? So you can see it full TP hits 4.65 R. So how did I enter the trade? Remember, you just go and watch the previous video, you see everything. But let me see if I can just do a recap again of everything some of the things I said. I saw this impulsive buy and the market started retracing gently. Are you seeing it now? Market started retracing gently, and then this is the other block. This is where the everything started. Market got close to it. Are you seeing it now? And started going back. This inducement to induce early buyers. Are you seeing it now? It started going out. So I was almost very sure that market would come back into this. So that is one of the reasons why I had my directional bias that market is going to sell. Where I entered, this is where I entered. So I was almost sure that market would sell from here. Are you seeing it now? That was one of the reasons for one of the narratives for my directional bias. Now, how do I enter my trades? Just as I said the other day, I want to see some things. I want to see some things for me to enter my trade. I want to see a breaker block. What do I regard as a breaker block? I want to see, can you see it? This red candle is my breaker block. I want to see market push up, sweep this like a small mini high, internal high, or sweep a high, sweep something like this, sweep this. I want to see market push up and then drop down and break structure aggressively. I am of the opinion, a very strong opinion, that if market wants to sell, if institutional players want to sell, they will buy first. They will buy up, take the price to a favorable price because they have the liquidity, and then sell from there. The same thing, if they want to buy, they will push the price down and buy from there. So let's say an institutional player wants to buy a car of 10 million naira and he has the capacity to push down the price of that car. He wants to buy a car, the normal price of that car is 10 million naira. An institutional player would not want to buy it at that 10 million. So what will he do? He will use his connections and whatever to maybe sponsor another company to start producing cars at a cheaper price. Are you seeing it now? Forcing the other people in the industry to reduce their price, then he now shoots up his price. It happened recently for those of us in Nigeria. It happens a lot with this one of the richest men in Africa and in the world, Dangote, Aliko Dangote. When he built his refinery, there was a time he dropped down the cost of PMS, petroleum what do they call it, premium motor spirit, that is fuel, car fuel, gasoline. He Since after building his refinery, at some point he dropped the price drastically, that other oil filling stations and others were struggling. They were running at loss, so they were forced to drop their own price. Are you seeing it now? Because he is an institution, so, and he has the money to push that. So what did he do? He dropped the price, so all of them had no option than to drop their prices. Then market will now what? shoot back up, you can now decide, by the time they've done that, you can now decide to push. Maybe buy all their own if you want, buy all their own. When they are short of gasoline, then it pushes it up. That's what big boys do. So they buy at their prices because they have the resources to buy, to control prices. So that's what happens with institutional players. If they want to do this sell, they won't just come here and sell directly. No, they will go up, liquidate people, take it to a favorable price, and then drop down. Are you seeing it now? So I'm of the strong opinion this video is all you need to crack whatever it is. I just hope you are getting an aha moment from what I just said. So institutional players will always, when they want to sell, they will always buy first, trigger people's liquidity. All this thing is money. They will always take it to a favorable price before dropping. So whenever I want to take a setup, I want to see a breaker block. Now, what is a breaker block? You see this particular place, normally it's supposed to be an order block because there's a little consistent large buying here. So what should happen is that market should come around here, tap it, and go back up. But I've explained the difference between order block and breaker block on this channel. I even used Gary and other things to explain it. So what happens is that market is normally supposed to come here and bounce back up, but once market did not do that, this place becomes a breaker block. So an order block is a breaker block rather is a failed order block. So that is what the market does. It does this and then comes back. Are you seeing it now? So I want to see a breaker block. Then where this large selling now starts happening is the order block, where the real direction started happening. So I want to see a breaker block and order block. Are you seeing it now? And that order block is characterized by what? A break of structure. So on 1 hour time frame, I want to see a breaker block, order block here, and then a break of structure. I want to see those three things. So when I looked there, I found them there. Are you seeing it now? Then I scaled down to 15 minutes. I scaled down to 15 minutes. This is how mechanical my trading is. Are you seeing it? Very mechanical. I scaled down to 15 minutes. And then I pinpointed the actual order block on the 15 minutes. I refined it. So this is the other block. Are you seeing it now? This red color, this is where it started, the selling started, that broke structure. And on my 15 minutes, I make sure it breaks structure on that 15 minutes, which it did. Can you see it now? It broke structure. Good. Now, on my 15 minutes, I want to see. Now I'm just handing you everything I do when I'm trading. I want to see markets coming back to the other block to continue the movement, because the other block, usually large orders, they can't take everything. The first one, they will first take the next one, come inside, generate internal liquidity before coming to take the next one. Are you seeing it now? Money got finished, they'll have to come back and push another another batch of orders, because the orders are usually very huge that the liquidity in the market cannot take it. So that's why you see other blocks being very active. Once that push has happened, if it comes around there again, it goes back again, coupled with memory and other things. Look at this channel. Look at the video I explained difference between order block and breaker block. You will get it. Are you seeing it now? So when market is retracing back to this order block, I want to see market get very close to the order block and then do instead of tapping into the order block, I want to see it reverse and come down, breaking structure. Are you seeing it now? Once I see that, that is inducement. Market induced early sellers. People that rush, they did not allow you to get to the other block. They say, I don't hear. They sold off. Are you seeing it now? Market, I want to see that. Are you seeing it now? Now this one is generating liquidity, because all their stops, all their orders will be here, all their stop losses, their money, their protection will be here. So market, the big players allow this. In fact, they contribute in making this happen. So people have entered, they have more liquidity. And then what will now happen? When market now goes back, sorry, my device is hanging. Oh my god. Let me pause. Can I pause this? What's happening? What's happening? What's happening? My god. Okay. Just a minute. Whoa. Sorry, I just had to reopen. Okay, so let's continue. Open, 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 open. Open up. Trading view. Okay. So I think we're back. We are back. Um Yes, it. So let me scale down to the 15 minutes time frame. Yeah, I was explaining. Oh, 15 minutes. What's up? What's up? Maybe I should just pause it first. Pause first. Close up. Okay, so good. We are back. Sorry for that. My device was hanging. So, okay, let's come here. So, this is the actual order block. This is the actual order block. Are you seeing it now? So, market gave inducement. Are you seeing it now? It came here, did that he wanted to turn. It even came here again, very close to it, and induced. Are you seeing it? So I want to see that. I want to see an inducement. What do I regard as inducement? Market will do as if it's retracing. When it gets to close to the place, it comes back. Okay, so now continue from where we stopped. So this is where the other block is. The other block is here. So I want to see an inducement, market going close to it, and then do a fake shift in market structure without getting to it. That's an inducement. So I want to see that inducement. There's an inducement here again. After this one, there is another one. Hmm? Let me zoom out so you can see it. Are you seeing it now? Oh, it's too much. So this is it. This is the inducement. The second one, you see, market went and didn't tap into the other block, came down, went up, and did this. So immediately I saw this, I knew, OT law. Are you seeing it now? So I now tagged the whole of them. I tagged the whole of this as liquidity. Are you seeing? Because there's one here, there's one here. So this is internal range liquidity. Because there are people that would have entered the it has shifted structure, then they enter, then they will be taken out. All this is to gather enough money for market to come or push and drop. So I put my pending order there. I was sure that's how I get sure. That's my lower time frame confirmation. I use inducement as my lower time frame confirmation. I do it on 15 minutes. Are you seeing it now? So I get my POI on 1 hour time frame. I check for everything usually on 1 hour time frame. I think I also do higher time frame, but this is just enough mechanical. On 1 hour time frame, you look for a breaker block, hmm, an order block, and a break of structure. Then I go to lower time frame, refine the other block to the lower time frame, get the actual place that it started, then wait for an inducement. I want market to get close to it and give me. Are you seeing it now? Get close to it. I want market to come close to it, shift structure, and then go back to tap it. That's one way. There's another thing that could happen. If there's no inducement, then what you want to see market get to the POI. Are you seeing it now? drop, sweep liquidity, come down like this, break structure, then you enter around here. I usually like maybe fair value gap here, you enter here. But usually I want to see an internal liquidity. Then market will just generate the liquidity, then come tap here and then drop. Are you seeing it now? So those are two ways. Is either the market goes close to your POI, gives you an inducement, then you enter. That's one. Or it gets to the POI, shifts structure and drop. Those are the two ways I trade it. So it can look like this one that you have here. It can also look like this. Market comes here, does this, comes above, does this, comes here, and then tries to drop, then comes back to tap this, and then drop. Are you seeing it now? But the one I'm always very comfortable using is that inducement. When I see that inducement, because it makes my risk to reward very, very healthy. So that was how I entered the trade. And then the trade just kept um what's this you're hanging again. What's wrong with you? Okay. uh okay, let me delete it. Let me explain what I wanted to explain. So I want to see the market. So market got here, and then it started dropping on Friday. It kept accumulating. I held the trade. That was on Thursday. It came up till Friday. I held it because I was sure of what I saw. Are you seeing it now? I was ready to take a loss. I did not break. I don't break even. I hardly break even. I don't break even, except there's serious structural shift to the downside further that I can now break even. Are you seeing it now? But I rarely do that. So with this accumulation, I stayed with it. Are you seeing it now? Then it was yesterday that market now finally dropped and hit TP. So the trade, this price action you are seeing here is Thursday, Friday, Saturday, 3 Thursday, Friday, Monday, 3 days. So it's not just about everything I'm explaining. The patience to wait for the setup and wait when you have been, the patience to wait in it, the patience to not come out here. Once you come out, you rush and get out of, you chicken out of trades. You are your your edge, you are denying it the opportunity to work out. Are you seeing that you are cheating yourself? So you should be able to hold trades. So when you are sure, that's why you should take trades that you are almost that tick your boxes, because it is in doing that that you will not be so scared. And then you should take trades with the right lot size. Don't trade too big. Trade like me, I don't risk more than 0.5% per trade. And I won't once I've entered, I won't be adding positions. And if you see me adding position, maybe the other trades I've been able to it has given me structural breaks that it just gave me another setup, another clean setup, as in another setup. I will just assume, okay, the first setup I took, maybe I missed it, I was not there when it got there. Then I see a clean fresh setup on the same pair, then I retake it as another trade. Are you seeing it now? But I don't risk more than 0.5% per trade. This is very, very important. See, you are the strategy. What I'm teaching you is not the strategy, is who you become in the process. That is the real strategy. So you are the strategy, and you be the strategy. Okay, so please subscribe. Subscribe to my channel and like. I won't hide anything. Whatever it is that is working for me, I'm going to explain it. I'll come here and explain and teach it. Then feel free to drop your comments if there's anything you want me to explain further. So I'm not explaining well to your level, or what I'm explaining is a bit higher than your level. Let me know. I'm willing to make another video as regards that. Okay. Thank you very much. Bless up.